analysis. Time now for the morning trade. We've got Intel in focus after its best week in decades. Joining us now is senior markets correspondent George Tsilis. Now, look, Intel is under some pressure today, but it has had a strong week. It seems like some of this has been really about its relationship and positioning when it comes to the Trump administration. How do you see this one, George?
Well, I mean, if you look at the performance this last week, it's up about 22%. It's obviously volatile today, trading to the downside on the open. But nonetheless, I mean, Intel, if you just look at it over the last 10 years, and you have to go back that far to really look at some of the established price action that we've seen over the past year with the stock down, just in the last year, down 45%. But even over the last 10 years, it's been down irrespective of dividends, about 31%. And this has been a challenging environment for Intel, considering they lost a lot of their business from Apple a few years ago. There are questions about what to do with its foundry business or its manufacturing business. And the Trump administration seems to be more favorable towards domestic production of all goods and services, particularly semiconductors, maybe for strategic purposes. But there's some news out there associated with potentially now a joint venture with Taiwan Semiconductor, which is actually starting to produce quite a lot of their semiconductors here in the United States. Intel certainly would benefit from that in conjunction with the CHIPS Act that the Biden administration put into place last year. But this is essentially a supportive element to Intel as well as Taiwan Semiconductor, alongside in conjunction with the U.S. government, to provide support for what would seem to be, or may in many instances look upon to be a critical need, which is semiconductors, alongside things like steel and defense.
So it's a critical need, and this begs the question, is part of this because of how poorly it had performed in general? I mean, last year was an incredibly difficult year for Intel. The stock was down, I think, around, was it 60% last year? It's been trading near, like before this recent price action, it's been trading near like decade lows. Is this sustainable?
That's a good question. Well, first off, if you just consider Intel's problems, they've been really idiosyncratic to the business. I mean, they missed out on a lot of the mobile chip growth that we've actually seen. They lost out with the partnerships that they used to have with Apple, as Apple started manufacturing their own in-house chips. If you also look at the losses that Intel produced last year, most of it, around $18.5 billion, came from one-time charges that the company has taken at around $11 billion. So in essence, the company lost over $18 billion last year, but just going back to 2021, they actually made close to $20 billion. So it's really been sort of idiosyncratic to Intel. I think this partnership, if it does manifest into such a joint venture with Taiwan Semiconductor, would effectively create some spin-off value of their manufacturing to Taiwan Semiconductor, because that's still a valuable element to Intel's business. But irrespective of those, idiosyncratic issues that Intel has faced, the entire CPU chipset business has been relatively weak, and that's indicative of weakness we're seeing in other competitors like AMD and even Micron.
Okay, right. So we're seeing some of that. But again, I wonder, to play the flip side of this, given the challenges, and some of them have been idiosyncratic to that. But given now, it seems like this proximity relationship with the Trump administration has been helpful to some companies and some sectors. Given that, does this position Intel better for the balance of this year?
I suggest it does. I think if you just look at Intel's business plus the write-off, the unusual charge that the company took last year for the entire year, at least the last 4 quarters, $11 billion, gives you an idea that they're really throwing everything out there. They're really coming clean in terms of the financials. They're also recognizing the product development problems they've had over the past several years, and that's indicative of the financials, which have really turned to the negative. So it's almost as if we've seen the worst out of Intel, and maybe going forward, things can only look up and promising, particularly when you have the backing of the U.S. government and the Trump administration. I think that's very powerful.
Yeah, absolutely. It seems very powerful, especially given the move that we've seen this week, countering a lot of the price action that we'd seen recently around Intel. George Tsilis, Senior Markets Correspondent. Thanks a ton, George. All right, let's trade this with Dan Deming, Managing Partner, KKM Financial. All right, Dan, given the context of all, first of all, good morning. I should start with that.
Morning.
You know, I always love hearing your insight. Thank you, and happy Valentine's Day. How would you approach, thank you, how would you approach an example trade when it comes to Intel?
Well, I think George hit on some good points, and to me, you know, the possible collaboration with Taiwan Semiconductor moving forward is something that's going to bode well for Intel as we move through this year and beyond. And you know, as it kind of reinvents itself, you know, it does appear to me that it's getting off the mat now, and as there should be some tailwinds for Intel moving through this year, just based on some of the points George touched on. So what I'm looking at today, Diane, is capturing further upside with the trade example today. And I'm looking at buying a March call spread, the 25-30 call spread. It's trading around 85 cents here. Intel was higher earlier. Now it's down a little bit, but to be expected given the fact that it's had such a significant run. But when you look at it from a technical standpoint, 26.5 to me looks like the breakout point, and that's the November high. And then I think we'll fill that gap going back to August, which comes in just above 29. And if so, this momentum carries, I could see us filling the gap in the next month or two. And this trade example would take advantage of that. And also the other thing about this trade example that I want to point out, defines your risk to the downside. So if there is some hiccups, if Intel all of a sudden loses its momentum, you do have risk definition in this trade example.
What's the exit strategy if it starts moving against you before that March 21 date?
Well, the risk here is about the 85 cents that it's trading at right now. So that's really the idea, is that you're willing to risk that 85 cents to capture $4.15. So really, the idea is just to hold it till expiration. I mean, there could be some counter actions that could be done. You could probably roll down the high side call or something like that if you want to try to reduce some of the cost. But again, this is a risk reward type of scenario where you're risking 85 cents to capture a little over $4. And the other thing is, Diane, you're defining your risk at 85 cents. So instead of buying the stock outright, say at 23.5 or 24 where it's trading, I mean, if it goes down 85 cents or more from that, then you basically just got open-ended downside risk if you just buy the stock outright. This way, you define your risk to the 85 cents that you're putting out to put this trade example on.
I like what you're saying about the defining the risk here. And then what about catalysts during this window that you're paying attention to?
Well, the momentum, for one, and also the technical aspects of when you look at the charts. There are some very interesting points in this chart. I'll break above 26.5 would basically confirm this upward price action. And then I think we're going to fill that gap, which comes in around 29. So that's the metrics on a technical side. Fundamentally, I think George laid it out perfectly, that just some of the general trends and the fact that they've been able to kind of clean the house. And now it looks like they're running a little leaner, and they might have some opportunities to collaborate, that they'll continue to participate more so in this evolution that's taking place in the chip sector.
And Dan, I want a quick thought from you on the market action that we're seeing today in terms of the equity price action, really range bound here. I was saying to Alex Coffey a moment ago, there was a veteran trader down here who'd been down here for decades who used to call a day like today waste of a clean shirt. How do you view this day?
Possibly. You know, we're catching a little momentum here. The market's still trying to maintain this upward momentum. And honestly, Diane, given all the things that the market's had to contend with over the last couple of weeks, the fact that it's still hanging in just below all-time highs for some of these major indexes, I think is a short-term positive. And again, seasonality is another factor here that I think also needs to be understood, that the end of February typically is not a very good period for the market. So if we can get through this end of February with little disappointment from a downside price action perspective, you know, I think that it bodes well as we move into March. So that's something that I'm keeping an eye on over the next month. But right now, again, key levels here as far as some of the major indexes, because we're just off some of those all-time highs.
Okay, get through February. It feels like a grind, whether we're talking about market action or the weather.
Or the weather.
All right, Dan Deming, Managing Partner at KKM Financial. Thanks a ton, Dan, and have a great weekend.
All right, you too, Diane.